So, Alex, are you really going to order dessert? You've already got a latte and a muffin. Isn't that overkill?
Why not? Look at this menu. It's like an art gallery for desserts. Besides, they've got a tiramisu here that's practically legendary.
Legendary. It's just coffee flavored cake, isn't it?
Clearly, you have no appreciation for the finer things in life. But hey, speaking of appreciation, ever wonder how prices work? Like, why does this tiramisu cost 3 times what it should?
I'm guessing because they know someone like you will pay for it?
Partly, but it's also about supply and demand. They've only got a few of these desserts, and everyone wants one, so they can charge more. It's the same with stocks.
Wait, stocks and desserts? That's a bit of a stretch.
Not really. When you buy a stock, you're essentially agreeing on a price with someone else based on how much demand there is. Stock prices go up and down for the same reason tiramisu prices can spike: popularity and availability.
Okay, so how does the actual buying part work? Am I supposed to bid for it, like an auction?
Pretty much. The stock market is like a big online auction. Sellers list their stocks at a certain price, buyers offer what they're willing to pay, and when the two match, a trade happens.
Interesting. So if I click buy on my app, am I literally taking stocks from someone else?
Exactly. When you buy, someone else is selling. It's all digital now, but it's still person to person trading.
That's kind of wild. So if no one's selling, I can't buy.
Technically, yes, but that's rare for popular stocks. There's usually plenty of buyers and sellers, especially for big companies like Apple or Google.
Huh, so it's like a cafe where everyone's rushing to grab the last muffin before it's gone.
Exactly. And the market matches everyone up seamlessly. The app just makes it look easy.
Okay, now I'm curious. Do these apps charge me extra for making it easy?
Some do. Most apps charge small fees or commissions per trade. It's like tipping the barista to keep the coffee flowing smoothly.
Alright, so you've explained how to buy stocks, but what I don't get is why their prices keep changing. It's like every time I check the app, it's a different number.
That's because stock prices are driven by supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down.
Okay, but why do people suddenly want to buy or sell? Is there some secret club where they decide this stuff?
Not quite. Yeah, it's usually based on news, earnings reports, or even rumors about a company. Think of it this way. If this cafe announced they were running out of coffee beans, people would rush to buy the last cups, right?
Totally. I'd be first in line.
Exactly. That rush to buy increases demand, which drives up the price. Or it's the same with stocks. When investors think a company's value will go up, they buy, and the price rises.
So, stock prices are basically the market's mood swings.
That's a good way to put it. It's called market sentiment, how people feel about a stock, and those feelings can change fast, especially with breaking news or big announcements.
Huh. So it's like when this cafe runs out of muffins, everyone panics and I'm left eating a stale croissant.
Exactly. Supply, demand, and sentiment work together to move stock prices sometimes faster than you'd expect.
Okay, Alex, I keep hearing about these things like the S&P 500 and NASDAQ. What are they? Just fancy stock names?
Not quite. Indices like the S&P 500 track the performance of a group of stocks. They're like leaderboards in a game.
Leaderboards? So, if the leaderboard goes up, it means the market's doing well?
Exactly. If most of the companies on the list are doing well, the index rises. It's a quick way to check the market's health.
Cool. But why so many indices? Why not just one leaderboard for everything?
Because different indices track different parts of the market. The S&P 500 focuses on big companies, the NASDAQ is tech-heavy, and others focus on smaller companies or specific sectors.
So it's like stats for different teams in sports? Like one for basketball, one for soccer?
Exactly. It gives you more detailed insights depending on what you're interested in.
Got it. So do I need to check these leaderboards all the time?
Not necessarily, but it's good to keep an eye on them. They're a useful snapshot of the market's overall performance.
Okay, last question. Who are the players in this stock market game? Is it just people like me?
Not at all. The market has a mix of players: retail investors like you, big institutions, and market makers.
Retail investors. That's me, the small fish. Who are the big ones?
Institutional investors, pension funds, hedge funds, and banks, they invest huge sums of money, often millions at a time.
Okay. And market makers, what's their deal?
They keep the market running smoothly. If there's no buyer or seller for your stock, market makers step in to ensure the trade happens.
So they're like the cafe baristas, keeping everything flowing.
Exactly. Everyone has a role, and together they make the market function.
So folks, what confuses you about the stock market? Drop your questions in the comments and Alex will answer them because I'm done asking.
Fair enough. And if you missed our first video about why investing matters, check it out. It sets the foundation for everything we've talked about.
And next time, we're diving into the different types of stocks you can invest in. So stick around and I'll see you there. Hopefully with fewer questions.